You see, when it comes to medical, if you were to pay yourself in the form of medical fees that you're either reimbursing yourself or essentially having the company pay for your medical plan, if you did so inside of an S corporation, those expenses, those medical expenses, will be deemed income to you. Okay, we have a question from Michael Kelly. Okay, does anyone know why the FMC that deals with medical reimbursement needs to be a C Corp? In addition, if my family uses a high deductible HSA account offered by my wife's employer, how is this related to the FMC and how should it be structured within it? Wonderful question, Michael. Wonderful question. So why is it necessary? Why is it necessary for the FMC to be housed inside of a C corporation? Well, it really boils down to a few things. The first thing it boils down to is the concept of reimbursement. You see, in the tax code, there are a variety of different benefits that dear old Uncle Sam has created for taxpayers to incentivize to do things. The first is a deduction, the second is a credit, and the third is an exclusion. Within the tax code, however, in the area, the realm of reimbursing ourselves, when we were employees, there used to be a benefit for that, meaning you used to be able to spend money if you were a W-2, and if you were not reimbursed by your company, you got to take a tax deduction for those unreimbursed business expenses. But in the realm of business, that sort of got changed as well, specifically in the realm of medical. You see, when it comes to medical, if you were to pay yourself in the form of medical fees that you're either reimbursing yourself or essentially having the company pay for your medical plan, if you did so inside of an S corporation, those expenses, those medical expenses, will be deemed income to you. So you'd end up paying income tax if it was an S corporation. If you are in an LLC, you're not an employee. Therefore, you can't reimburse yourself as an employee in an LLC. The only place you can reimburse yourself as an employee is within a C Corp or in an S Corp. And we already said that the S Corp is a no-go because reimbursing yourself will be deemed income to you. But the C Corporation gives you the opportunity to take advantage of something called a medical reimbursement plan. And what this does is it gives you the ability to have the company, the C Corporation, pay you in a reimbursement for any out-of-pocket medical expenses. Now, the beauty of this system is it's all medical expenses for you and your family. And it doesn't even have to be you personally that's the employee of the C Corp. In fact, many times when we're setting up a medical reimbursement plan, we'll set up FMC2 as a C Corporation and we'll employ the spouse. Typically, it's the non-working spouse or the spouse that doesn't have a high income environment outside of any business activity. And we do that for a variety of reasons, but the main reason is because it doesn't matter if you, the taxpayer, or your spouse, the other taxpayer, is the one being reimbursed. In a married filing joint situation, all of the family's medical expenses can be reimbursed inside of that FMC2, and you get a full deduction. So the second part of the question was, what happens if I have a high deductible HSA? Well, really nothing, because it's all medical expenses. So let's say your wife has a high deductible HSA and maybe your deductible is, I'm going to be a little bit crazy here. Maybe your deductible is $5,000. Well, all of that out of pocket, whether it's a deductible or not, is reimbursable under a medical reimbursement plan. So if you have a high deductible plan where your family gets to take advantage of saving money into an HSA, so every year you're contributing into the HSA and getting a tax deduction for doing that, so long as you're not pulling money out of the HSA to pay for the benefit, and you're using other monies to pay for the benefit, the FMC2 can reimburse you for those out-of-pocket expenses. You can't double dip, though. You can't take money out of the HSA and also be reimbursed by your medical reimbursement plan. You can't double dip. I would love if that were the case, but no, you can't do that. So hopefully that helps give a little bit of context. Inside of our community, We have an entire strategy around the Family Medical Reimbursement Plan under the FMC2. I would definitely encourage you to jump into that training if you have not yet unlocked it inside of the community, because I spend hours going through all of these different types of strategies, and I give context and examples so that you can actually start putting these things in action.
If you're still a bit confused with regard to the topic of family management companies, I actually have a private membership community. It's called the Uplevel Community. And in there, each and every day, we engage in topics just like this, answering questions, interacting with one another. If you'd love to learn how to apply to join, go ahead and click the link in the description below.